This week's Qatar Economic Forum, held in Doha, went beyond the Middle East to include a focus session on emerging markets of Asia and Africa. That program was powered by Bloomberg. Two leading bankers, Tony Elumelu of the UBA Group and Tan Sushal of the DBS Bank Group, sat down to a discussion on the evolving landscape of banking and finance and their role in global trade, tech innovation, and more. Let's take a listen.
I took over as CEO a day before Liberation Day. We came up immediately with scenarios. And you know, it's interesting. The trade outside the US, which we call TOTUS, T-O-T-U-S, it's actually still 89% of world trade. And so the playbook that we had was, we'll have to plan for every kind of scenario, from the worst to the best and the stuff in between. And then we have to help our clients to navigate. First order impact would be countries that are affected, obviously China predominantly, to the US. Industries that would be affected, which would be consumer discretionary, electronics, semiconductor, etc. And then figure out, you know, what the playbook would be for the first order impact. The second order impact, however, which was the bigger unknown, was number one, the increase in volatility, tremendous volatility in interest rates and exchange rates. Number two, the crash in consumer confidence. Number three, the huge volatility in markets. Global markets went down a lot, if you remember, it went back up. But it was this huge volatility that we had to help our clients navigate. Most CEOs don't like uncertainty. We had a great, when I talked to all my colleagues in other banks, everyone had a great first quarter. But second and third quarter, everyone said, you know, our clients are pressing the pause button because nobody knows. I haven't heard so many CEOs say these three words, I don't know, as I have since April 2nd. Having said that, though, I do believe that in Asia anyway, a lot of Asian clients and Asian companies realize, look, there is a lot of trade to be had outside the US. Intra-regional trade in Asia is growing. You have a population of nearly 5 billion, a population that is educated, hardworking, and very AI-focused, and very much focused on the future. So if we invest correctly, and we look at, you know, other supply chains, you have to help your clients to diversify their risk. And with volatility, you can actually grab a really good rate or a really good exchange rate to help. And look at new supply chains and look at also new technology, tech stacks, etc. So it will be a bifurcated world, and we're just going to have to live with it.
Tony, before I get your take, I do want to give a homework assignment to the audience, and that is a poll that we are going to do. Sushan was just mentioning a number of disruptive factors that we've seen first half of the year. So our poll question for the audience, hopefully you'll engage, what is the biggest driver of transformation in global banking right now? We have three options up there for you: disruptive technologies, currency volatility, and tariff and trade policy. And we'll circle back after this conversation to see where the audience is. But Tony, let's get your take on what we have seen in the first half of 2025, especially from the perspective of a CEO of an African bank, looking at really the macro picture right now.
Okay, so I chair United Bank for Africa, and UBA serves 45 million customers across the globe. We operate in 24 countries on 4 continents. And we process transactions in billions on a daily basis. UBA is helping to transform lives on the continent because payments and access to finance are critical for the development of Africa. But we're just starting. There's still so much to be done. And from where I sit as the chairman of this bank, I believe that banking infrastructure is as critical, as important as in the transformation, the renaissance of Africa, as power, roads, ports. And the key thing is what we all need to do to have the banking sector, the finance sector, drives Africa's prosperity, drives Africa's transformation in the 21st century, given where we're at and the challenges that we see. So for me, there are 4 critical pillars we need to tackle. One is to make Africa a safe haven for savings. Mobilizing domestic savings is very critical for transformation of economies. 2 is to enable private global capital find its way into Africa, to help power investments that we need to drive the continent's economic transformation. The 3rd is capacitizing and improving our ability on the continent to transact and swiftly effect payments. Africa is a continent of over 1.3 billion people, and yet we don't have very strong, robust payment engine, which is where institutions like United Bank for Africa is coming forward to provide opportunity and solution for that gap. And lastly is what I call Africapitalism, which is enabling the private sector to drive, orchestrate, and lead the growth and transformation of the continent. I believe that these are things we need to do to take Africa to the next steps.
How do you think about African banks, though, in the context of what is developing a lot of new trade relationships outside of the continent? Where do African banks fit into that playbook?
I like the questions you asked. If I was looking at the currency payments.
We're going to get to that.
And I'm telling myself, if I were to vote, which one would I vote? So for Africa today, African institutions, what we do at United Bank for Africa is because we see that there's a gap. Payments, trade. And so African institutions are building capacity, but we need to also partner with the rest of the world to have robust payment capacity to help transactions as well as facilitate trade between Africa and the rest of the world. For instance, United Bank for Africa will operate in the Gulf, and we like to follow Gulf businesses into Africa. We understand our ways around Africa. We want to handhold companies that are coming to Africa to invest. We also facilitate payment with the rest of the world. So we believe that in the 21st century, African financial institutions should be strong on trade facilitation, should help payments transactions for the continent and with the rest of the world, and most importantly, be catalytic in the transformation of the continent.
And Sushan, can you jump in? Because we were talking about the payment infrastructure that is a focus for DBS. Can you speak to that?
So, what do banks do, right? Banks take deposits and they lend it to businesses or individuals. And that role will be disintermediated by fintechs that can do unbanking, do something, one vertical really well. So for us to continue to be relevant, you have to be digital. You have to have your data in a data lake, and you have to have your AI models, and in time to come, which is now, be able to adopt the new generative AI technologies. So in order to continue to be relevant in deposit gathering, you have to do payments. That's both domestic payments and international payments.
Let's talk about the Naira. Thanks, Sushan. Because the Naira has had quite a bit of volatility, Tony. Yeah. Is the risk as great, though, for African currencies as the perception has been over the past few years?
I think first, for those who don't know, Naira is the Nigerian local currency. And currency volatility is a challenge for Africa and for Asia. This global south, fixing the volatility of our currencies will be very critical for ultimately developing our economies. So it's a challenge. And everyone thinking about a solution to that, hoping we can find one soon. But talking about Nigeria, let's break it down a bit, As an investor, because beyond being a bank chairman, I wear other hats. I invest in oil sector, the power sector, and hospitality and the real estate sector. What's important to people to a large extent is predictability, stability. Let me know, even if the rate is, whatever the rate is, but let there be predictability. Let me enter the boardroom. Let's plan. Let's build scenarios. Let's be sure of what it will be. So in Nigeria, we've had currency situation, but in recent times, there's been interesting, encouraging stability. So we can plan, And that is very, very, very welcome. It's a good development, and I'd like to see that continue. And for me, as I think of not just Africa, but Africa, Asia, that is very critical for every economy. Stability and ability to predict your currency is very critical. Now, you talked about gains. Yes, some people, there's gains when you have a volatility. There's losses also. But what's important is taking advantage of the opportunity or the challenge. If you find a solution around the challenge, it becomes an opportunity. If you see an opportunity and you take advantage of the opportunity to further strengthen your balance sheet, if you're a financial institution, even for a non-financial institution, strengthen your balance sheet and position because of that currency fluctuation and volatility, which will definitely come again, either in near term, mid-term, or long term. So currency is a challenge, but almost a constant for planning in Africa as it is in Asia. And the ability to predict is very critical. And that is what I see in Naira today. I see Naira is becoming quite stable. And I have friends who live in the other OECD countries, want to do transactions with Africa and Nigeria in particular, and they are happy that there's stability and predictability of the currency. And we want to see it stable and, if anything, go down progressively.